Hello, everyone. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you're tuning in from. Well, as always, I'm excited to welcome you to another edition on the Forex Morning Mastery, our weekly dose of trading strategy and financial insight. My own name is Sheriff Daramola, and for the next 30 to 40 minutes thereabout, I am going to be your host as I will be taking you on a trading journey where we shall be evaluating the financial market from both technical and fundamental perspective with the utmost intent of having a deep insight into the behavioral patterns of market participants, and of course using that information to strategically position ourselves for the next move. So far this week, we have been monitoring three financial instruments, which includes the USOILSPOT, the GBPUSD, and of course the XAUUSD. And so far this week, we've done fairly well across the asset we are looking at. We've done pretty well on the USOILSPOT, which has been on a downturn since the beginning of the week amidst concerns as regards to global demand. And of course, the GBP USD though was a little bit choppy during the first 24 to 36 hours of the week, but has finally gained some traction in the opposite direction as we saw a new resurgence in the US dollar, which obviously has incited some bearish buyers on that particular asset. And of course the final one, which is the XAUUSD, which of course has been a roller coaster of buys and sell during the first day of the week. We were looking at selling opportunities, and of course yesterday we were able to identify a reversal pattern that could incite an uptrend move. So today we are going to be looking at how well these assets have been doing so far, and of course we are going to be using that information to position ourselves for the next move. Um, Prior to that, we are also going to take into consideration the fundamental factors, of course. And for those of you who are with me on both my TradingView and Telegram platform, you definitely must have gotten an insight into what we are looking at, but we are going to be elaborating on that today. And before we go into the details, I would like to welcome the newcomers in the house. That is, those who are joining us for the first time, who are not, who are still wondering what this is all about. The Forex Morning Mastery is an idea that was born out of the necessity to do follow-up details on the my weekend videos. So I usually share a couple of videos during the course of the weekend on my preferred asset for the week, indicating what my plans are. And during the Forex Morning Mastery, we come here together to review how well the market, how well these trades are doing, and how we can actually use the structural patterns we have on the charts in conjunction with the fundamental factors to determine if we are going to be buying or selling. And it's at this juncture it's important for me to also mention that this is not a signal service platform, but instead an avenue, an educational avenue where we come to really have a deep insight into what is going on in the market. And irrespective of whichever type of trader you are, you can simply use this information to strategically position yourself for the next move, and of course use it to navigate the dynamic to your own preferred approach to the financial market. So once again, I do welcome you on board, and it's important to also note that it may look a little bit challenging at first as regards to my analytical approach, but trust me, with time, the more time you spend with me, the better you get to understand and comprehend my analytical approach, which eventually will help you in making your own independent trading decisions. So once again, I do welcome you on board and encourage you to actively engage in the comment section. Trust me, you can ask me any questions that you feel you want to ask that is bothering you as regards to the financial market or any of the assets we are looking at for this week. And I also encourage you to actively engage in the comment section, and I would also appreciate you to drop the hashtag Forex Morning Mastery in the comment section, as this will help boost the SEO rating and of course allow the algorithm push the video to a wider audience of traders. And if in any way you have found this content helpful in making your independent trading decisions, I would really appreciate your support by giving the video a thumbs up. So with that being said, here we will be diving right into the business. I see you, Mansuru. Good morning to you, Mansuru. Trust you're doing very well. Glad to have you around. I'm very well, thank you. All right, so with that being said, we are going to be moving right into the business, and as always, the first thing we normally do is to keep tabs with the fundamental factors that will be influencing the sentiment in the market today. And by checking the economic calendar, we tend to identify how upcoming economic events might influence the sentiment in the market, and this helps us to spot potential correlations between key economic releases and specific technical patterns on the chart, allowing us to time our positioning more effectively. And based on the asset we have been monitoring so far this week, we have been focusing on high impactful events from both the United States and the United Kingdom economic docket. So far this week, we yet to witness any high impactful event, as Mondays and Tuesdays has been more of meteor economic features, which has in one way or the other has its own influence in the market. But today happens to be one of the major highlights for this week, as we are looking forward to some high impactful event that will definitely be influencing the sentiment in the market today. So for today, Wednesday, July 24th, we are looking at a bunch of high impactful events from both of these economies, that is the US and the United Kingdom. However, this morning we've already witnessed one from the United Kingdom, and the one we are looking at today, in fact all of the data we are looking forward to today is more of reports from the S&P Global publication. And for those of us who do not know, this is a key insight. It's a key insight into the health and performance of the service and manufacturing sector of both the United States and the United Kingdom economy. This report goes a long way to provide valuable data on factors such as business activities, new orders, and employment levels, which can directly influence the sentiment in the market. So this data here is considered to be one of the major key economic data majority of the market participants are looking forward to decide if they are going to be buying or selling any of these assets we are looking at. And if you remember vividly, on Monday we did talk about the increased sentiment as regards to the Fed Reserve cutting interest rate as early as the month of September. And in fact, looking at the CME Fed Watch 2, we are looking at a 94.6% in support of the Fed cutting interest rates in the month of September, and this has obviously influenced the sentiment surrounding the US dollar. And of course, we all know by now how the potential of interest rate cuts affects the US dollar negatively, and so we've been looking forward to a downward trajectory for the US dollar, but the path through which it's going to take is what we are trying to phantom and decide. Hence, we are going to be looking at the structures and patterns today to see if today will be the beginning of another wave of downturn in the US dollar, or we may likely look forward to the later part of the week. So the other impactful So for the S&P Global for today, we already witnessed the composite manufacturing and services PMI from the United Kingdom, where the composite and manufacturing PMI came in a little bit higher than the market expectation. And for the PMI data, it has an index of 0 to 100, where anything above 50 shows that there is an expansion in that sector. And if we see anything below 50, it shows that there is a contraction in that sector, which is not something that will be supporting the currency of that economy. So for the composite and manufacturing PMI from the United Kingdom, we saw 52.7 and 51.8, which was higher than the market expectation and even higher than the previous month, except for the CIPS services PMI, which came in below market expectation at 52.4, but it's still high above that 50 mark we are looking at as a positive report for that sector. So if I sum up the all data we received this morning from the United Kingdom, things are still looking very rosy in favor of the pound sterling. Hence, the path of least resistance for pound sterling is still looking bullish at this point. So we are going to be looking at the GBPUSD chart in a moment to see how we will be navigating this current market dynamics. Then later on today, we are going to be looking at the manufacturing and services PMI from the United States, and this will be coming in about 4 hours from now. So it's important that we have this marked out in our calendar so that we can be around to see how the market is going to be anticipating this event and of course reacting to the event. Now, looking at the previous data for the manufacturing and services PMI, we are looking at a 51.6 and 55.3 respectively. And based on what is on ground right now, market participants are looking forward to almost the same figure, but a little bit lower as regards to the services PMI. So, okay. Oh, sorry. Thank you for that. Thank you for that feedback. Thank you very much. I never knew the sound was on. I hope you heard all what I said. If you didn't, I will definitely repeat myself, but let me know in the comment section. I'm sorry about that. I never knew it was still on. All right. So we are looking forward to the S&P Global in about 4 hours from now from the United States. And I am not sure market participants are looking forward to anything higher than market expectation, considering the not too impressive data coming out from the United States in the last couple of weeks, and coupled with the fact that inflation is easing in that economy. So we're looking forward to this event, and of course we know that the anticipation of this event usually has its own way of influencing how market participants will behave, which obviously we will be seeing on the chart as structural patterns in price action. So with that being said here, let's dive right into the business. So I see you, Balata. Good morning to you. And please let me know if you can now hear me clearly. I'm sorry about that sound in the background the other time. So with that being said here, we will be diving right into the business. And as always, the first asset we are going to be looking at this morning is going to be the USOILSPOT. And so far this week, we've done pretty well on this particular asset. We have been selling the USOILSPOT throughout the course of the week, looking out for selling opportunities on Monday, and yesterday when I gave an update on the USOILSPOT, we looked out for another selling opportunities below the $78 area. So let's look at what has really happened for educational purposes. Let's look at what had guided our decision through the course of the week, and of course how we intend to use this information to strategically position ourselves for the next move. So before I go in, I want to also state that I will only be deliberating on the 1 hour time frame, which is our execution time frame. We already done a top-down analysis on this asset at the beginning of the week. So if you missed out on that top-down analysis, I would encourage you to watch my Monday video where I did this analysis, showed you how we are going to be using the structural patterns we identified on the higher time frame, which includes our key levels, the major trends, to decide if we are going to be buying or selling for the week. The link to those videos are right in the description box of this current video you are watching. So at the beginning of the week, for the first 8 hours or so, it was more of a range bound structure. Remember, we saw price action confined within the $78.95 level and the $78.60 area, giving us a range bound structure, which obviously emphasized the prevailing uncertainty in the market at that point in time. And you know how we use our range bound structures in this community. Whenever price falls within a range structure like this, we know that there are reason indecisions, hence we want to exercise patience and wait for the negotiation between buyers and sellers to finally come to a conclusion where we will either see buying opportunities, we will either see buyers taking over the market if price breaks out of the resistance line of the range bound structure, or sellers taking over the market if price breaks down the support line of the range bound structure. As you will see here, at no point in time did we see price break out of the resistance line, so it was more of looking out for selling opportunities as at the beginning of the week. And of course, we joined the breakdown of the support line at the $78.60 level. We saw price come back. We saw the breakdown of the $78.50 level too as well, giving us two sell positions. And the first sell position moved about 110 pips, while the second sell position moved over 100 pips, giving us roughly about 150 pips after moving our stop losses, and of course the resumption of buy pressure in this particular market. And for those of us who missed out on that opportunity on Monday, we saw how the market came back to retest the structure that was broken on Monday to inside the second leg of that bearish momentum. And if you remember vividly, during my commentary yesterday morning on the USOILSPOT, we had a new technical structure where I identified this ascending trend line and the psychological $78 area, where I did mention that we will be looking out for more selling opportunities if price breaks down that $78 area. And as you will see, in the last 24 hours, we saw how price moved significantly, over 180 pips before buy pressure resumed during the later part of the New York session. And of course, we saw selling pressure resumed again during the Asian session. And so far this week, we have been quite profitable on this asset. And for those of you who are part of this profitable journey, well done and kudos to you. And for those of you who still have a sell position running at this point in time, just like me, I still have my sell position intact. It is high time you want to be moving your stop losses accordingly to secure this position right now, because anything could happen considering what has been going on here in the last 12 hours. Now, for me, it is most appropriate that we move stop losses to anywhere around the $77.40 level, an area which has a buying niche at some point in time at the beginning of the week, as you will see here, before price broke down the structure. And since the breakdown, we have seen that this area has not found comfort for buyers to push price to the upside. So it's important that we move our stop losses. So if you still have your sell positions active, kindly move your stop losses and secure these positions right now. So with a well secured position at this juncture, what is going to be our next line of action today? Are we going to continue selling the USOILSPOT, or are there chances that buyers could begin a reversal setup that could incite the uptrend continuation that we are looking at on the higher time frame? Now, before we go into the technical details of what we will be looking at to decide if we are going to be buying or selling, it's very important that we also keep tabs with the various factors behind the scenes that will be influencing the sentiment in this market. And one of the key drivers in this market is the what's it called, the geopolitical tensions in the Middle East. And this has obviously been one of the major reasons why sellers have taken over this market, as we learned that there is an optimism surrounding the potential ceasefire negotiation between the Israeli government and the Hamas militants. And due to this, market participants are beginning to feel that there might not be concerns as regards to oil disruption anymore, and this has led to that decline we were seeing since the beginning of the week. However, yesterday we got some report from the American Petroleum Institute, that is the API, weekly crude oil stockpile report, which showed that there was a significant drop of about 3.9 million barrels for last week, compared to the market expectation of 2.47 million barrels. So this was quite a very, very high figure. And by now, for those of you who have been with me for a while now, you know how these usually influence the sentiment in the market. So when there is a high drawdown in crude oil stockpile, it simply shows that the demand in the market is so high that they had to rely on their stockpile to feed the growing demand in the global market. So this resulted in the decline in the crude oil stockpile, and this is more or less a positive sentiment in favor of the US oil spot, which could trigger any buy pressure anytime soon. So that is one of the major reasons why I've said we should move our stop losses if you still have your sell positions active. And then another factor that will be influencing the sentiment in the market positively is the current challenges faced by the US dollar due to the rising bets that the Fed Reserve will cut interest rates as early as the month of September. And I did mention earlier how the CME Fed Watch tool has indicated a 93.6% probability of a 25 basis point rate cut in the month of September, and this has further influenced the US oil spot positively. Now, I know you will be asking, how does that influence the US oil spot? Well, by now you know that the higher the US dollar, the less chances that market participants will want to buy the US oil spot. Why? Because the US dollar being very expensive for other currency assets to buy. Remember, the US oil spot is a US dollar denominated asset, and for you to buy the US oil spot, you need to convert your local currency to buy the US dollar before you can get the US oil spot. And so because of this reason, there could be reduced demand. But right now, when the sentiment supporting interest rate cut has increased, it makes this market a little bit more welcoming for more demand in the market. So a lot of people will want to increase their oil reserve, taking advantage of a weaker US dollar at this point, and this could escalate prices and find new highs. So these are the major factors that will be influencing the sentiment in the market for the later part of the week. And besides this, the upcoming Energy Information Administration report, which is coming up, I think tomorrow, today, it's coming up today, and this will also help give the market a clue of where it's going to go. Now, if the EIA report comes in just like the API report, that is showing a significant drawdown in crude oil stockpile, we are likely going to be seeing a rise in oil prices today. Now, considering all of these factors, let's go into the technical details on the chart and let's see what will be happening. Now, before I go further, it's important for us to also take note of the upcoming economic data today, that is the US PMI reports. We have also the gross domestic product annualized for Q2 coming up tomorrow too as well, which will be given the market an insight into the economic condition of the United States, which obviously will be influencing the interest rate. So as it is right now, looking at the current market structure, the first thing I observed here is the fact that since the beginning of this week, the market has been on a strong bearish note. And to emphasize this, connecting the series of lower highs gives us a beautiful descending trend line to work with. And you know how we use our descending trend lines in this community. As long as price remains below the descending trend line, we want to feel comfortable in a bearish bias, and the only condition that will make us buy is if this descending trend line is breached and broken to the upside, except for rare cases where we see some significant signals that buyers may likely get stronger and even has a strong potential of breaking out of the descending trend line. Now, looking at what has happened here in the last 12 hours or so, it is quite clear that buyers appear to be taking some traction in this market. So the lowest point price has gotten to this week is a $76.30 level, and the subsequent attempt by sellers to continue the momentum appears to have stalled, as you will see buyers push price around the $76.85 level, hereby evolving into a potential reversal pattern in the form of a double bottom structure. As you will see here, we have a higher low, and if this continues, we may likely see price break out of the neckline of that structure. Now, to make things a little bit simpler for us to navigate, we are going to be marking out where our neckline is going to be on this one. So the neckline here is going to be around the $77.30 level. So we want to be marking this level out on our chart, as it's going to be playing a significant role in guiding our trading decision for the second half of this week. So I would like to label this area. So we have the $77.30 level. I encourage you to do the same as well. So I want to see price breakout retest of the structure to give me a good confirmation that we are going bullish, and in fact a breakout of that $77.30 area will be validating the reversal setup we just identified here. So to give a visual representation of what I'm talking about, we are looking at the breakout retest of structure, and then if price goes ahead to break out of the descending trend line, then this will give us more confidence to add more buy positions to our existing trade. Then in addition to that reversal setup is this ascending trend line I spotted here. So this morning I also marked out this one, so I would like to thicken it a little bit to give us a to signify its importance at this juncture. So this ascending trend line here will continue to help us navigate this current market dynamics. So as long as price remains above this newly identified ascending trend line, we will feel comfortable in our buy position. And of course, I will be with you in the comment section of both my TradingView and Telegram platform to give us updates on what more levels we can add more positions to maximize the uptrend move. Now, in as much as we're looking out for buying opportunities, you know how we do it in this community. Due to the fact that the market is an uncertain environment, it can choose to do whatever it wants to do, irrespective of what the theoretical expectations as regards to the fundamentals is saying. Now, in this case scenario, if we are going to be considering selling, what are the chances, or what are the things we want to be seeing on this chart that will make us feel comfortable joining a bearish move? Well, the first thing I would like to say here is that I would need price to break down the lowest point for this week at the $76.30 level. So we have a sell stop order right there to continue the downtrend move. However, there is still a possibility that price could give us a signal of a strong bearish momentum or a downtrend continuation scenario even before the breakdown of this $76.30 level happen, and this is where the ascending trend line comes into play. Now, this ascending trend line here, if I see price breakdown, retest the ascending trend line on my lower time frame, that is why I have that level at the $76.85 level, then this will give us a good opportunity to join even before the breakdown of the $76.30 level happens. So you can see how crucial that ascending trend line is. And of course, we are saying here that the breakout retest of the $77.30 level will be welcoming more buying opportunities. So let's see how the market is going to play out around this area, and trust me, I will be with you in the comment section of both my TradingView and Telegram platforms to give us updates as at when due. So this is my simple view on the US All Spot for today. I do hope I made myself very clear, but if you have questions or you need some further clarifications, feel free to let me know in the comment section. So as always, I will be taking the next 10-15 seconds off. Let's see if there are any questions before we move on to the next asset on our watch list. And you can use that time as well to mark out these levels and structures on your chart, as you will be needing them as a reference point to guide your independent trading decisions today. So I will see you in the next 10-15 seconds from now. Cheers. All right. So in the absence of no questions, I want to assume that we are all on the same page on this one. So in that regard, we shall be moving into the next asset on our watch list. Stay tuned in, guys. So the next asset we are going to be looking at this morning is the GBPUSD, that is the British pounds against the US dollar. And based on what we are seeing on the chart right now, all our sell positions have been closed due to the recent buy pressure we saw here in the last couple of hours now. And so far this week on the GBPUSD, we really have not done well at all. As regards to the market, has been a little bit choppy since the beginning of the week. As you will see here, price action was more of the first 24 to 48 hours trading within this restricted area that is between the 1.29400 level and the 1.29050 area, emphasizing the prevailing uncertainty in this market at that point in time. And due to the situation we have here, the market has displayed a sense of indecision going into the second half of the week. And if we look at the recent decline in the pound sterling, This could be attributed to the modest recovery in the US dollar, giving it an edge over the British pound in the last 16 hours thereabout. However, I can still tell you for free that the pound sterling has been exhibiting some resilience, and from all ramifications, the path of least resistance is looking very bullish for the pound sterling. Remember, we have been buying this asset since in the last couple of weeks. We had a very strong bullish momentum last week, and of course the bearish buyers we are looking at this morning or this week will be attributed to some profit-taking activity, which will definitely reflect on the chart as a retracement move. And some of the various factors behind the scenes that will be driving the sentiment in this market is the risk of sentiment, as the softer risk tone is providing further support for the US dollar. In the meantime, we saw a recent uptick in the US Treasury bond yield, and we do know how the US Treasury bond yield is directly proportional to the US dollar. So the US Treasury bond yield, if it rises, there is a high chance that the dollar too will rise, and if the US Treasury bond yield drops, then the dollar is likely going to drop. And in the last 24 hours or so, we saw an uptick in the US Treasury bond yield, which in one way or the other has influenced the US dollar positively. Then another factor that will be influencing the sentiment in the market this week is the uncertainty surrounding the Bank of England's interest rate cut. And in fact, based on all what we have seen so far, even despite the fact that the Bank of England has met their target for inflation at 2%, there is still doubt over cutting interest rate anytime soon, and this is basically because of the service inflation, which is at some record high at the moment at 5.7%. And if the service inflation is still high, it will not be reasonable for Bank of England policymakers to start cutting interest rate. And the fact that the idea or the diminishing odds of an August rate cut by the Bank of England could be serving as a significant platform to push prices of the British pound to the upside. So, like I said earlier, the path of least resistance for the pound sterling is still looking very bullish. Now, with the situation and with this understanding in mind, let's look at things from a technical standpoint and look at how we will intend to capitalize on any potential opportunity today. Now, one of the things I identified this morning is the descending trend line, which obviously has captured the character of price action in the last let me say 36 to 48 hours. So you can see price has been nosediving, finding consistent and uniform lower highs and lower lows. Now, this trend line you see here is going to be playing a significant role in guiding our trading decision for the second half of the week. And you know how we use our descending trend line. As long as price remains below the descending trend line, we want to be looking out for patterns and structures that support the idea of selling, and we are not going to be buying unless this descending trend line is broken or breached to the upside. Now, for the fact that price still trades below the descending trend line, we will be looking out for selling opportunities below the lowest point here at the 1.28840 area. Now, for me to sell this, below this structure, I would rather want to wait for confirmation to join that bearish move. Remember, I mentioned that the path of least resistance for the pound sterling is looking bullish, and in fact we saw here that in the last 1, 2, 3, 4, 5, 6 hours or so, every time price comes into this area, we saw how the candle transitions into a hammer candle, which theoretically says that buyers are still present in this market. Now, if I do want to sell the GBPUSD, I would want to see confirmation on my lower time frame. So after a breakdown happens, I want to see price do a retest of structure with signs of continuous selling pressure, giving me signs that buyers are finding it difficult to maintain the momentum above the 1.28840 level. Then I will now join a bearish move to the downside. So we will need some confirmation to join a bearish move to the downside on this one. However, if it so happens that this trend line is breached and broken to the upside, then we can begin to consider buying the GBPUSD. In fact, I would like to see price breakout retest the structure where the key level at the 1.2900 area. Remember, this is our key level for this week. If price can maintain momentum above the key level, then we will be feeling comfortable in our buy position. So our center of focus on the GBPUSD is between the 1.2900 area and the 1.28840 level, where depending on the direction of the breakout will give us an idea of where price is likely going to be heading to for today's trading session. So I encourage us all to mark out this range bound structure, as we will be needing it as a reference point to guide our independent trading decisions today. So let's see how this is going to play out in the next couple of hours, and if anything new comes up, I will definitely give us updates on both my TradingView and Telegram platform. So I hope I made myself clear on this one. If you have questions or you need some further clarifications, feel free to let me know in the comment section. So I will take the next 10-15 seconds off. Let's see if there are any questions before we move on to the final asset on our watch list today. Stay tuned in. Okay, so I see a comment here from Mansur. Good, Mansur. So Mansur says, could you please provide, could I provide him with a video of the go-go challenge that he would want to watch how I trade on that channel? All right, very good question. Okay, let me simply state this here. How I trade is simply emphasized in the Forex Morning Mastery session we take in here, and they are very simple for anyone to actually comprehend, as it is based on structural details we identify on the chart. Now, like I just told you, now if we are going to be buying the GBPUSD, we want to see price break out of the 1.290 area for us to consider buying, and of course we will be having our stop losses right below the previous structure. So it's as simple as that, just placing your buy stop order right there, and if you are not yet profitable, then you wait for a retest of structure for confirmation's sake before jumping into that buy position. It is very simple. Now, as regards to the go-go challenge, the go-go challenge for me is a challenge for me, and this challenge here, I want to trade on a small size account. Like I did tell you during my first introduction on the go-go challenge, that I've received quite a lot of messages from members in this community who mentioned that they do trade small size account compared to me talking about a minimum of $1,000 account size. Now, due to this situation, I wanted to put myself in the shoe and see if it is truly possible for one to trade a $200 account and make it rise significantly. So it's a challenge for me, and on this challenge I put it out to you guys and say, okay, fine, let's look at this together and see how this is going to work out. So basically, for you to be able to be part of the Go challenge, you would need to be a member, a premium member of this community. So it's a way where you can see me live, do what I explain here, but in another manner, in the sense that since it's a small size account, I'm going to be more of scalping or doing day trading. Traditionally, I am a swing trader, so I usually hold trades for a longer period of time. But in this case scenario, I'm trying to put myself in the hot seat and see if I can actually scalp the gold market using a $200 size account. So it's not really about how I trade the Go challenge. It's about me doing something outside my comfort zone. So this is basically why the Go challenge is coming into play. And if you are willing to be part of that challenge, then you can actually do the token and then be part of that. So it's not really compulsory per se. It's just I'm just trying to make fun out of it and then see if this is something we can do on a small size account. So I do hope I answered your question there, Mansour, on that one. And if I didn't, please let me know so I can clarify on that one. Okay. All right, so in the absence of no further questions, I want to take that as a confirmation that we are all on the same page. So we shall be moving on to the final asset on our watch list for today. And I hope you've marked out these levels I mentioned here accordingly, and let's see how this is going to play out today. So moving on. So the final asset we are going to be looking at today is my favorite amongst them all, and that is the XAUUSD, popularly known as the gold spot. And on the gold spot, we had some buy position triggered yesterday after identifying a reversal setup. I did updated us yesterday morning in my commentary on my TradingView and Telegram platform that we are looking at buying at the breakout or retest or the 2,400 to continue that uptrend move. And as you will see here, we had a buy position triggered as at yesterday, and of course as at this morning while I was updating us on my Telegram and TradingView platform. We were still having two buy positions running, and after telling us all to move our stop losses, I moved my stop losses to the second entry at a $2,412.15 level, and as at this point in time, all buy positions have been closed. And in fact, I have a new trading setup identified on the lower time frame, which I did share on my YouTube channel here. And if you're a member of the community, you would have seen that setup there. And in fact, that setup is going to be the basis upon which we will follow up on during the Go challenge session. So for the sake of clarity and educational purposes, let's run through what really happened at the beginning of the week and what led to the decisions we made. So at the beginning of the week, it was more of selling the XAUUSD. Remember, we were selling, we had a range bound structure where price was initially confined within the 2,412 and the $2,399.50 level to emphasize the prevailing uncertainty at that point in time. And of course, when we have a range bound structure like this, you know how we do it. We exercise patience and wait for price action to either break out of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. And mind you, within this choppy market condition during the first 10 hours of the week, we had this ascending trend line. For those of you who saw my weekend video on the XAUUSD, remember we were looking at this ascending trend line on the higher time frame, and we saw how price was trading below the ascending trend line. In fact, it broke it, retested it, and incited this bearish engulfing candle, breaking down the 2003.9950 into the 2003.950 level. So it was more of a 160 pips move, as you will see here, except for the scalping of the XAUUSD on Monday for us wasn't doing very well, but on a swing trade perspective, we did scoop in some modest size of profit on this one. Then prior to yesterday's trading setup, I begin to notice that sellers have been finding it difficult to break through this lowest point for this week at a $2,399.50 level. And after observing this, I had no other choice than to make this area a temporary demand zone that is between the $2,385 and the $2,390 area, approximately a $5 range structure there, making it as a demand zone. I was looking at the possibility that this could be another platform that will incite new highs in this particular market. Now, to give a visual representation of the pattern I was seeing here, so when we consider this bearish impulsive move to the downside, we saw price come back into structure, came back down again, and the inability of sellers to break down the previous low was a signal that buyers are getting stronger. So we had a reversal set up in the form of a double bottom structure, and we did mark out the neckline of the double bottom structure, which beautifully shares a confluence with the $2,400 area. Remember, the $2,400 level was our key level for this week, and you know how we use our key levels in this community. When price breaks out of the key level and climbs above it, we want to be looking out for patterns and structures that support the idea of buying that asset. And of course, we saw what happened yesterday morning. Immediately after my update, we saw price break out of the structure, and if you had missed out on that opportunity, the market came back, retest the structure, and look at what happened. Price had continued to find higher highs and higher lows. Now, at this point, we were taken out with a minimum of about 150 pips thereabouts on this one. But this morning here, I'm beginning to see something new, which is going to be the basis for our go challenge session. So what I did here is to identify, have a new chart, and within the new chart here, I had the structure marked out immediately. So looking at what has been going on since the beginning of the week, it is quite clear that the market has been very bullish. And after considering the character of price action since the beginning of the week, connecting the series of higher lows here, we have a couple of ascending trend line to work with. Now we have the first one and we have the second one right here, and you know how we treat our ascending trend lines. As long as price remains above them, we will be looking out for patterns and structures that support the idea of buying that asset, and we will not be considering selling unless the trend line is breached and broken to the downside. So as a result of this, I do have a buy stop order sitting above the $2,419.20 level, with the hopes that price, if it continues to the upside, I will be on standby right there to capture that momentum. Now, when I scale down into the lower time frame, which I did updated us on my post section on the YouTube channel, I saw a new trading setup on the 15 minutes time frame. Now, right here on the 15 minutes time frame, this was what I was able to come up with. And for those of you who are members of the community, that is premium members, you would have seen this update, and of course you should have had a sell position triggered at this point in time. So in that update, I shared this range bound structure here where price is confined within the $2,500 $2,418 level and the $2,412 area, giving us a range bound structure immediately after this impulsive move. So the question was, will this turn out to be an uptrend continuation pattern where the breakout of the 2,418 will welcome more buying opportunities, or will price action break down the support line, retest it to incite a sell-off? And you can see what has happened here. Price action has broken down the $2,414.20 level, and in the last in the last 2 hours now, we can see prices trading below that structure. And for those of us who took advantage of this opportunity, we are currently running with about 30 pips or 25 to 30 pips in profit at this point in time. And within this situation now, it is appropriate that we move all stop losses. Let's secure this current sell position, as we never can tell, anything could happen and price may continue the uptrend move. And in fact, we did not talk about the fundamental factors which is influencing the sentiment in the market. And during the course of the Asian session, we saw a rebound in gold prices, and despite the short-term rebound in the US dollar and US Treasury bond yield, the gold was very positive during the Asian session. And the bullish momentum actually is driven by several factors which I shared with you in my commentary this morning on my Trading View and Telegram channel. We have a weaker tone in the global equity market. We also had a modest pullback in the US dollar and the US Treasury bond yield, which favored, was expected to be against which is supposed to favor the gold commodity as well. And of course, behind the scenes is the growing acceptance that the Federal Reserve will begin its interest rate cutting cycle in September. Then besides that too as well is the US political development, which has prompted some intraday selling around the US dollar. Remember last week, following the assassination attempt on the former president of the United States, Donald Trump, there was this huge sentiment that Donald Trump will become president of the United States.